Action. Welcome to the show. We're back. Aram, good to see you, my friend. Aram came to me the other day and he says to me, listen, like, I'm a busy man. Time is precious in this universe. Uh,
Mm.
don't just book random calls on my calendar with randoms on the show. And then I told him, okay, listen, like, I'm happy to talk to anyone about anything, but, I respect you. And you're right, time is precious. We only have a certain amount of hours on this earth, and it's not worth spending that time with random. So we went big, right? I kind of went the other side, right? You kind of got a guess today that there is no arguing about the fact that this is the big time, and it's very relevant and very pertinent to today's news. Obviously, everyone, including Aram, myself, everyone's talking about the Robinhood chain that just launched. Nick has some history and connection to Robinhood as well through a company that he was on the board of. So we have a lot of very interesting ground to cover, very cool topic for today. This is going to be an incredible show for anyone who's still around with in tokenization. And I said today to a friend, I said today, like, crypto investing is in a bear market, but crypto building has never been hotter. That's kind of,
Mm.
if you had to tell me 5 years ago that Robinhood are going to be doing a chain, I would have told you that you're sleeping. Like, the most bullish expectations of the past are now just another news item on a Tuesday, and the market isn't moving. The market isn't moving, and this is an opportunity for those of us that are plugged in to connect with each other, to kind of get our seats before the show begins and before all the action returns. So I'll stop for now and hand over the mic to Aram. What's happening? It's been a while since our last show. So
Jim,
what's cooking on your side?
Jim, it's pretty exciting times. We're in the bear market, but as I've been saying, I'm more excited than ever. We are having two things developing side by side. On one hand, we have what's happening on the crypto side, mostly it's real world assets coming on chain. On the other hand, we have AI and AI agents and what they're doing on chain. So pretty excited about all of these things. And I understand we're in the bear market, but it's a temporary thing. So we go through cycles. So I'm not really worried because I've been through a couple of bear markets. I've learned my lessons. So, and yeah, I'm doing the right things now. So all good.
Awesome, and a pleasure to have Nicholas Tadani on our show. Nicholas has a stellar reputation both in TradFi and in Web3. He's one of the few, he was on the executive team at TMX group. They are the Canadian exchange that owns the Toronto Stock Exchange. He also worked at other firms in the TradFi in on Wall Street, and then he crossed over to the dark side or the light side before it was cool. Obviously now you're hearing a lot about people that are coming into. JP Morgan has a vault on Ethereum and Robinhood had a chain, but Nick came into the space a lot before them, and he sort of paved the floors for his more TradFi colleagues of his to join. And it's great to have him on. Nick was on the board at INX when I was working there, and that's where I actually got exposed to RWA for the first time. As we said before the show started, it was not so long ago in time, but a different era
Yeah.
mentality wise. So it's great to have Nick on the show. Welcome to the show, Nick.
Thank you for the invite, gentlemen. And David, heard a lot about you when I was at INX, and it's great to finally connect face to face. But yeah, it's certainly the market has changed a lot. And you're just before we got on live, you were talking about the difference in regimes from one regulatory regime to the next. It's kind of an appropriate term these days, I guess. But yeah, it's dramatically different today than it would have been even as much as 3 or 4 years ago, which you're right. My exposure to INX, I I met the founder in 2017 or 2016. And yeah, it was a very different time, very, very different time. And, back
Yeah.
then, actually, funny enough, you guys are talking about the bear market. There was a bear market at that time as well. And I think Aram, you were just mentioning that, building during a bear, you're excited about all the building that's going on during a bear market. In my experience, as far as markets and businesses, the best creations or the greatest things actually happen in markets, distressed markets. So it's we're kind of in one of those right now, as it relates to crypto. Although many pundits or many critics are waiting for that to also happen in the TradFi market. Right? It's been real frothy.
Yeah.
You might see it in certain segments, like in the SaaS market. SaaS apocalypse, what have you. But certainly, it's an exciting time, and I'm excited to hear what you guys want to talk about.
I want to talk about so much. I mean, we'll definitely get into tokenized stocks. We'll get into AI, whether it's a bubble or not. But I want to start off at the beginning, not not when you were born, but when you were born again as I'm a crypto bro. I'll put it in quotes because you're obviously way beyond that. But around 2018, you had a stellar career in traditional finance. And 2018, I remember 2018. I was in the space in 2018, and I didn't give up. The corner offices in Wall Street, and people still thought I was crazy for coming in. They still asked me if I needed to take medication. Because what you looking in blockchain. Go do something responsible. Look at your brother; he's a doctor. So to go through like that thought process for you in 2018. Like, what was it like? Take 8 years back in the time machine. Where were you at the time, and what led you to make it was then and still is a monumental decision to come and pivot into the space?
Okay. It's funny, as you were asking the question, I'm starting to reflect back on that period. And the first thing that came to mind was a lot of the decisions that you make at a specific point in time in your life are anchored by either memories or reflections from an earlier point in your life. And what it took me back to is when I started in the TradFi business, when I graduated from university. My first job was on a trading desk. It was we were trading equities at a little firm called First Canada, and I wasn't the best trader, and the reason why I'm telling you this story is back then in the early '90s, when you traded equities and you were trading in New York, or even in Toronto, or you're trading GE or what have you. A lot of times you'd have to pick up the phone to get the trade done, and you would phone another trader in another place, who would relay your order to somebody else, who would relay your order to somebody else. And I remember the time it was probably like 14 sets of hands touched an order before an execution. On NYSE, maybe it was in the late 80s or something like that, early 90s. And it just seemed a little odd to me that you wouldn't have more automation in that process. And ironically, Canada was actually a leading market when it came to exchange or exchange automation. Like the very first electronic stock exchange was in Canada in the 70s. So the reason why I go back to that point is I was a younger kid on a trading desk that was advocating for more automation. And I was continually told that that was not likely going to happen anytime because you can't automate the trading of stocks. And when I thought about that evolution and certainly my career, every time you counted technology, you said technology wasn't applicable or it wasn't going to evolve markets the way markets have evolved over the last 30, 40 years. It did. Now, the time at which that evolution took, it takes time. So as I got more familiar with blockchain and some of the underlying assumptions and tenets around crypto, it really started to make a lot of sense to me. And I'll be honest with you, the one thing that didn't make a lot of sense to me was the terminology and the colloquialisms and the language that was used to describe a lot of the budding or building of this new financial infrastructure. A lot of terms that didn't make any sense. But for a TradFi guy to think about more efficient ways for users to move money, more efficient ways for assets to be securitized, more efficient ways for market participants to play within the market. These are all the basic underlying tenets of blockchain, crypto, Bitcoin. Like it's amazing. So when you look at that through that lens alone, why can you not be excited? And then when you extend that to the whole idea around smart contract and what you can potentially do with a smart contract, I don't know what TradFi person wouldn't be excited. So, and then the last piece of credit I have to give is a gentleman that I met probably 2017 through an introduction. I got a friend who's an investment banker at one of the local Canadian firms. And he was basically one of the founders of a company called CoinSquare. CoinSquare would have been at the time Canada's largest digital asset business. So I had an opportunity to sit with him and listen to his story. And I remember when he was telling me the story, he pointed at our financial center at King and Bay, because his office was at a building about 6 or 7 blocks away. And he says, you know what, we're going to take those guys down. And I thought, ooh, that's pretty ambitious. But he went on to describe what, like, the rationale and the thinking behind that strategy. And candidly, it actually made sense. What he was putting in place were the core components of what would essentially disintermediate a lot of what the current financial infrastructure did. So, when you start adding all of these components together, it started to make sense to me that, and I still honestly very much believe that if I'm so lucky to have this discussion with you two fine gentlemen in another 3 or 4 years, we'll be talking about all the amazing things that have happened. Largely, we'll also be talking about how businesses that we don't even know of today will be the businesses of the future. So, there's lots of reasons to be excited. Why did I make the decision? It just also came at a very fortuitous time in my career where one chapter was closing and another one was opening. Am I still involved in TradFi? Yes, of course. But I don't actually make the delineation, David, Aram, between TradFi and DeFi or NewFi at all. I actually think it's just going to be one financial infrastructure or one financial ecosystem that's going to have elements of both. The last thing I'll leave you with is, on this point, I was in a conversation on a particular discussion yesterday on, is this person right or is that person right? And you know what? Sometimes it doesn't really matter. At the end of the day, they both have very cogent arguments, make a lot of sense, and the truth always is it's going to be somewhere in between.
Yeah, I mean, I'm a big believer in that, like peace over truth, and truth is peace. Like if you have any truth that is, absolute and cannot sustain itself when forced with reality, is not really truth. It's just some guy's theory. Truth is one that can kind of survive and thrive when it experiences contact with the ground.
Yeah.
So,
Yeah, sure.
that's how I think everyone's coming, whether people are from TradFi and they're kind of warming up to smart contracts and tokenization, or whether people are complete degenerates and they're warming up to things like KYC, AML. I think there's a general, a general realization on both sides that we have to get married, and the marriage, everyone will keep some unique elements of their own world, but the marriage will create a sum of something that's bigger than the sum of its parts. Before we go into the new world, and obviously, first of all, we're going to say, a big what's up to Michael from Ireland and Madi from Nigeria, and we also have Zainib. I don't know where you're from, but welcome to the show. But before we get into the new world, I want to go back to the old world a little bit, help us and the viewers at home understand a little bit more about what goes on to running an exchange. We don't often, a lot of DeFi guys, a lot of, crypto's going to take over and replace the stock exchange. Like when you say that, it's got weight because you've run a stock exchange. So, maybe we can phrase it like this: when a company comes and IPOs on your exchange, like talk us through the process, like what goes on behind the scenes, and walk us through the parts of the exchange business that the outside world doesn't really get to see.
Okay, sure. Thanks for the question. So if I may, can I take a 1-minute detour on
You
the
can
exchange?
take it. We've got 60 minutes here, so
Okay.
take us on the journey wherever we end up. We end up.
So prior to, let's say, approximately the year 2000, okay, every exchange in the world was owned by who? Who do you think it was owned by?
By the Rothschilds.
They were owned by the members. And the members would be the banks, the brokers, in some instances, the asset managers in every single market they operated globally, going back in time. Why is that? Because back then, which is still relevant today, by the way, the major users of an exchange are those banks, the brokers, and the asset managers. They're the ones who use the exchange. They bring all the amazing retail clients and institutional clients to the market to transact, to buy and sell stocks, mostly, and ETFs, okay, structured products. Today, most of those same exchanges are owned by they're public companies. They're owned by the public, shareholders. So the reason why I share that small anecdote is because when they're owned by the members, they cater to the members, the desires of the members, right? They cater to their needs and their wishes. When they're owned by the public, they cater to their wishes. Public companies care most about earnings, growth, and obviously what other things public companies care about. Companies that are owned by a group of members, would care about different things. They do care about earnings, but not as much. The members would care about their earnings. So it becomes more of a co-op. All right. So the reason why, again, I share that is the behaviors of exchanges has transformed dramatically in the last 25 and 30 years. Okay. And in some circles, in many circles, industry participants will say they have transformed in what might not be the most productive way. Okay. Now, what's involved in running an exchange? An exchange really has three components. One component is everything that we talk about, which is the trading piece. You see the stocks that trade, you see the pricing, you see the activity every day. If you're involved with the New York Stock Exchange, you'll see all of the IBM or Cloudflare or whoever else, Caterpillar, those big companies, how much did they trade today? What was their top price? What was their low price? The open, the close, et cetera, et cetera. That's one part of the exchange. The other part of the exchange involves getting those companies to list on the exchange. And that's a competitive process. In the US, the two exchanges that compete the hardest on that topic are New York and NASDAQ, right? NASDAQ would have been the upstart market in the 80s, or actually, I think they started in the 70s, if I remember correctly, early 70s. And they would have been sort of the first competitor to NYSE. And now recently you've got something called the Texas Stock Exchange, which is now listing companies as well. And Exxon, I think, is projected or is in the process of moving their listing to that market. So you've got the trading business, you've got the listings business, and then you've got another piece called the data business. And the data business has been the fastest growing component of a stock exchange, or say fastest growing business line. And inside the data business, you have a number of different things, but every time you get a stock quote, Aram, on your favorite stock, you type it into Google Finance, or you type it into a Definitive or a Bloomberg quote terminal, that triggers a payment to the exchange. The exchange gets paid on every single piece of data that they sell. And they make a lot of money. What you should know is that the biggest exchanges in the world, their profit margins, actually, let me turn it around. What do you think is a really healthy profit margin for an operating business? What's a healthy profit margin?
For
Depends on
exchanges,
industry, no?
How much?
I guess it depends on industry. In some industries, it's a single digit. In other industries, it's super profitable.
Yeah.
So yeah, but I'm not sure about exchanges.
Okay. Well, exchanges
I would venture between let's go with 23%.
Okay, that's a very good guess. You know why? Because when most of these exchanges, before they went public, called the average profit margin. So for every for $1 of revenue that they took in, how much would go to profit? What percentage? So before they went public in late 90s, early 2000s, that number was around 30%. So you're not that far off. Today, the average for many of these large exchange groups, whether it's NYSE, ICE, NASDAQ, CBOE, London Stock Exchange Group, Hong Kong, they range between, hold on to your chairs, my friends, call it 60 to 80%. Let that land for a second.
Let that simmer.
That's a pretty good business, huh?
What caused as we like to ask, what caused the pump?
Well, I went back to my story, which is when exchanges were basically catering to their members, there was almost like an understanding that, because I'm catering to you two guys and you're my members, I'm not going to charge you too much for certain products and services. Well, what's happened over time is that contract has been broken. And now the chart, like the mechanism, the pricing power sits with the exchange. And they're not really thinking too much about their members, especially when it comes to the topic of market data, because they're charging, they have the liberties to charge rates that are much, much higher than they used to be. And there's technical elements of the business that allows them to charge for things that they were not charging for, 25 and 30 years ago. So my point is, if you think about an exchange, go back to there's three main lines of business. The first one's the trading business, which we talk about, all the stocks that trade. It actually accounts for the smallest part of the revenue and earnings or profit. The There's the listings business, which is a bit higher in terms of profit, and then there's the data business, which is by far, if you look at almost most exchanges around the world, most big exchanges anyways, they're making a lot of their money in the data business. So that's how these businesses function. That's where they make their money. Now,
Interesting.
so think about that evolution and then apply it to the digital business and the crypto business. In my humble opinion, it doesn't take a genius to figure out that a lot of these same trends are probably going to manifest themselves in these other industries or in these other, DeFi worlds. So that's kind of my lens. I think exchange business is a fantastic business. Where else can you have even 30% margins are great, but 60, 70, and these are regulated businesses. They're protected.
Yeah, that's the real alpha.
So there's a moat.
Yeah.
So, anyways, hope I answered the
Not
question.
every. I do want to go, like you mentioned that you kind of see the same trends playing out in Web3 and DeFi. Obviously, when you say the word exchange, most of the people watching the show, they think Coinbase, Binance, Kraken. Obviously, NYSE and Nasdaq, it's very different. Like they're actually issuing assets, and but you can see a world where a Coinbase becomes sort of like where there's regulation for direct on-chain issuance of securities, where those securities can be issued on Coinbase or on Kraken, and then you can see a reality where Coinbase, Binance, or maybe not Binance, but the crypto exchanges adopt a lot of similar functions as a regular exchange. Now, that is both obviously an opportunity and it's a big threat, a big risk, because the exchanges that you're familiar with, the ones that you ran, they have hundreds of years of history, which has led to things like circuit breakers and the time off for weekend. And there's there's a lot of fail safes in place to make sure that the exchange operates in a way that's advantageous to the traders, to the general public, to the shareholders. Crypto doesn't really have those protections. It's a lot newer industry. So if you were to trying to create like this hybrid, this kind of like take the best from crypto and take the best from traditional exchanges, what kind of features, what kind of specifications would you look for in this sort of exchange of the future?
That's a great question. Okay, so what does crypto do really, really well? Innovates super fast. So actually, it's not fair to say crypto. Let's say digital assets, because I like to think of like DeFi or I think of crypto, RWA, like tokens, all that stuff. I think of that as digital assets. All right. Whether I'm right or wrong, that's how I think about it, because I try and simplify things in my own head. And then if you think about the traditional finance world, their assets are they're traditional. So let's use that as a bifurcation or the separation. So the digital world moves way faster, like way faster. Okay, in terms of the innovation cycle, the digital world is much more inclusive. Okay, in other words, the number of players, the number of voices, the number, like it's almost like anyone who wants to come to the party is welcome. That is not the case in the traditional world. I mean, it is as a client, but certainly not as a creator. Okay, because regulation makes it a lot harder for that. And the digital world does an amazing job at just the expanse of new product creation and the velocity of that creation. It's just it's mind-blowing, actually. What does the traditional world do really, really well? It is about protecting the investor. There's a big effort, which is one of the reasons why the SEC and many of these regulators spend a lot of time on and energy trying to make sure that products and things that get listed are in the best interest, best interest of the investing public, because you're protecting the average person all the way up to institutions, but really they really focus on the average person. So they do that well. They put industrial grade infrastructure in place. In other words, they try to make sure that the system doesn't fail on a number of levels, both from a risk perspective and from a technology perspective. So you've got industrial grade solutions, very commercially minded in terms of how they're built. I think those are the main points of contrast, I would say. And yes, there's innovation. It just moves a lot slower because you got to get regulatory approval. You got to get systems changed. It takes time. So what are the best things you would take? I think, to me, you would start there. You would fuse those components together. So in other words, where crypto lacks a lot is that industrial grade, that credibility. The other thing I will say about crypto is that traditional crypto and digital asset folks talk in a language that is really, really, really hard for the average person to understand. Equally, hardcore financial services TradFi people talk in a language that is also really, really, really hard for the average person to understand. And what I would love to see is people start talking more layman speak. Like, make it really simple. And I feel like that is one of the key missing ingredients. And that's certainly where digital assets or DeFi and TradFi, they don't actually connect so well just because of that major translation barrier and yet in many instances, they may actually be talking about the same things and the same outcomes, but because the language is so different, it's, gas fees, and it's like, come on, man, just like, make it simple. These are, it's transaction fees. Make it simple. So I think that's one thing that we as an industry should really work hard to translate and make it simple for people to talk to each other. The other thing I think that would be really powerful is the velocity at which you can move capital around in the world of digital. That's going to transform TradFi, and you're already seeing it in the world of stablecoins and what have you. Many large financial institutions used to make a lot of money. If Aram, you were going to send money to David, I charge you 1%. I mean, just for you to send money to your friend, which is insanity. And I think when you look at the digital world, you guys can move money around real simply at almost no cost. So I think that, to me, is going to be one of the big innovations or transformation that's going to take hold and going to certainly challenge the current system. But yeah, to me, the digital piece is probably the most exciting. Like, think of, like, if we had to sit here and talk about TradFi and the most impactful single securities instrument ever created, and if I told you that was probably the ETF, we'd probably agree with that, right? With one single structured product that has transformed the investing business and the financial services business, it's probably the ETF, right? That is a structured product. And by the way, that very first ETF was listed in Canada, just so you know. So that's a piece of financial innovation that is tremendous. Cool. Well, with a smart contract, you can make everything an ETF or everything a structured product in a real world asset. You can tokenize anything. That's, to me, that takes the ETF innovation on a new level. Because if you're an investor and you want exposure to anything or any instrument, we tokenize it. Three of us figure it out, tokenize it. That's what INX did. So to me, embedding that type of innovation into the like the TradFi world, equally fusing both the best of both of those dimensions into what will be the new world of finance in some time. That gets me excited.
Epic. Thank you for that. I want to take it to Aram, but before I do, CPI print just came in last month, 4.2% inflation. This month was estimated to be 3.8%, and it came in at 3.5%. So inflation seems like it's cooling off. Will it hold? What will the pattern bring? We don't know, but for now, we're getting a little bit of a relief pump thanks to some lower inflation. Perhaps we'll get the rate cuts back. Who knows? But that's some breaking news that I felt like sharing. Aram, it's over to you.
Yeah, I couldn't agree more with Nick. I really love the point about crypto making things unnecessarily complex. And I think it's one of the reasons that crypto, the way a lot of the crypto natives were trying to push it, didn't really go mainstream. And now it's going mainstream in a different way. And one of the big companies that I've been following and I love that has done a great job in that space is Robinhood. And I think it's not just in crypto, they started, and I think the Vlad has been also, like a great founder, has been doing a great job. And I've been following their journey for a long time. And I know you have also been connected to that in a way. So I wanted to touch a bit on that and kind of hear your perspective and your story. So you've been on the board of the CoinSquare and later when it got taken over by the WonderFi. Yeah, and I think like 2025 last year, WonderFi was acquired by Robinhood for 250 million Canadian dollars. And I think the deal was finalized last month. Like if I'm not mistaken.
Yeah, you're right.
Yeah, I want to kind of like just take us inside that story. And I'm also curious, like what exactly did Robinhood buy? Were they after the license, users, the team? Just kind of give us your perspective here.
Yeah, well, thank you. I mean, look, I think, and as you say, I think Robinhood is one of those innovators, global innovators. Certainly, they've been humongously successful in the US, and now this is their entrance into Canada. What did they buy? Well, they bought a company with the largest footprint as it relates to digital asset users. They bought the company that was the first regulated company in our market and probably one of the first regulated companies in the space globally. That was the CoinSquare piece. CoinSquare got regulated, I want to say 2021, I think. It's either 2021 or 2022, can't remember. And they bought a lot of customers, they bought licenses, they bought a lot of infrastructure locally. To be honest, I've seen this before where companies get excited about expanding globally. And then they go, typically if it's a US company, Canada's geographically pretty close. President Trump calls it the 51st state. But so it's easy to think about if you're a US company to expand north to Canada. That's not hard. It's not like you're expanding to different language. So that was an easy one for them. They're going to be competing in a market where there is another version, like another local player called Wealthsimple, who is a tremendous business run by a tremendous operator and a great team. So I don't think it's going to be easy for them because those folks are very good at what they do. for Robinhood, Canada is not their focus. Their focus is the US and any other big market that's going to drive earnings. That's where they're going to be focused. So we'll see. But I think for them, it's a tremendous opportunity to bring some of the innovations that they have globally into this market. It is a pretty, it's a pretty innovative market, and they can do some really cool things. So I think, I'm excited for them, and I'm excited for what the market's going to see and benefit. I'm sure it'll be a really interesting time watching them face off against Wealthsimple and then some of the other players. But yeah, I think, one thing I would mention to you guys is it's very hard to expand globally in financial services. And I'll tell you why. Okay. Like financial services regulation is local. It's not global. And let that land for a second. Think about what that means. In crypto is borderless. But what and this is to me one of the key points of tension. Digital assets and crypto is borderless. There's no border. I can send you electrons. I can send you from my IP address to your IP address. I can send you whatever I want to send you. But the problem we run into is when it starts to cross borders, each one of these countries claims sovereignty over what happens in their country. And, financial transactions of a certain type, that falls into that same bucket, which is why you mentioned about KYC and AML. These are all conventions that came up in TradFi. These are all new to, David, you highlighted that earlier in the conversation. So my honest belief is, even though crypto and digital is borderless, it's going to run into the practical reality of borders, especially when you start moving into larger and larger transactions. So for it to actually get the credibility of TradFi, they're going to have to recognize those borders and respect them. Don't get me wrong. I think there'll always be that fringe that won't. But if you want to have, like, if Coinbase is going to become a JP Morgan, it's going to have to act and look like JP Morgan and respect a lot of those rules, which I think they are doing. So I think the same thing holds true as any of the new upstarts continue to get bigger. They're going to have to respect a lot of these things.
What about the inverse of that? If let's say the Nasdaq has some sort of an arrangement with Kraken to tokenize shares, Coinbase to become JP Morgan, they need to respect the rules. What do you think a Nasdaq will have to do in order to become like a Kraken? Like things like custody, liquidity, 24/7 trading, like changing the mindset of the corporate culture. Like, what do you think it's something? What do you think needs to be done in order for the exchanges to adapt to this world of tokenized everything? And do you think that it's something that can happen in the near term?
Yeah. And when you say exchanges, you're referring to like the Krakens, the coin.
No, I'm talking the opposite, because you mentioned that Coinbase need. Okay. I'm talking about the flip
traditional
side.
Exchanges.
Traditional exchanges.
Yeah.
They started to put out feelers and make the announcement that they want to tokenize.
Sure.
What needs to change inside the organization for that to happen?
So the biggest difference with an exchange, like a traditional exchange, and let's say a Kraken and what have you, in my humble opinion, the biggest difference would be the velocity at which they innovate, and let me be clear. Innovating can be defined in many different ways, but like the three of us can actually innovate right now and come up with a bunch of cool ideas. But the actual act of completing that innovation is deploying or introducing that idea to the market. And I'm not saying that the traditional exchanges don't innovate. They innovate tremendously. But the act and the speed at which they're able to come up with this idea and actually execute on it takes a lot longer than, let's say, a Kraken or Crypto.com or Coinbase. Like they're moving much faster. And part of that is because the traditional exchanges are subject to a lot more regulation, right? And like they're just kind of buried with a lot of red tape. To be fair, some of that red tape is really, really helpful. Much of it is not, okay? So what is it gonna take for these traditional exchanges to move and do some of the things like, or partner with I think they can partner with the Krakens. I think what we in the exchange business and we in the regulated business, we would be very careful. Like, so for instance, if the three of us had a business, okay, and it was an exchange, there are certain activities that we do within the exchange, and I want you to understand this point very carefully, that are regulated activities. Okay? In other words, when we have a market, when we create a marketplace that allows people to buy and sell stocks, that is a regulated activity. Now, if we take that same piece of technology, right, and instead of that marketplace trading stocks, we allow that marketplace to trade unregulated instruments. Like, by the way, foreign exchange is not regulated. You know that? If you trade spot FX, US dollar versus CAD, euro versus CAD, that's not regulated. So if you take the same exchange technology and now instead of you turned off all the stocks, but you just allowed people to transact in foreign exchange, that's not regulated. Knock yourselves out. So here's my point. Where I think things could get real interesting, one of the areas anyways, is where traditional exchanges have all of this cool infrastructure and they have all this connectivity to the entire investing public, whether it's retail people or institutional people. They have those connections. So imagine if they now open up their dimensions, their universes, their worlds to unregulated instruments. Aram, if you wanted to trade a stock, is that hard to do?
For me, no, because I have different accounts with different brokerages, and also there is the online tokenized stocks. But I know for a lot of people in different countries, it's hard. I mean, I have like apps like Revolut and others, which is very easy, which is kind of like alternate, similar to what Robinhood does. But Robinhood is unfortunately not available in a lot of countries, and it's a really good, sleek app, right? And I know they expanded to Europe, Canada, and other markets, but it's still not accessible to people in Africa, a lot of Asian countries, Latin America, etc.
Right. And one of the key points of connectivity, all right, is if you want to trade a stock, especially in Apple as an example, or Nvidia, most banks in the world, most local banks in the world are connected to a local broker. That local broker has some mechanism to connect to the New York Stock Exchange, or NASDAQ. And if they can, so my point is the connectivity between the bank and the broker to the exchange, to a global exchange, is already all there. But today, what happens on those exchanges is largely all you're transacting in is in stocks, mostly stocks and structured products. But imagine if all those same exchanges were transacting in digital assets, real world assets. You name the asset, what's it called? The art, digital art. What do you call that?
NFTs.
Again? NFTs. Okay. Like imagine if that's how it all worked. If NASDAQ bought Coinbase and now they used all of their technology, they fused it all together. and you had one big happy universe. But you have certain assets that were regulated and certain assets that were not regulated. And the regulated assets would be things like stocks and bonds, and but foreign exchange was not regulated. So that could also trade on the system, but it would trade on a different part of the system, right? And then you have people like Robinhood tying all of these assets and all of these exposures together in their app to make it real simple. I mean, to me, that's where it starts to get super interesting.
I want to ask you a quick question now, because we started talking about trading stocks. So what I'm seeing now, particularly in this tokenized space, there's largely two approaches. One of them is you are told you're trading stocks, but it's not really stocks. It's like on the stocks, X stocks. It's you're getting exposure to the stock, but you don't actually own the stock. And then there is the other approach, which is Superstate is doing, for example, but they have only like a few stocks, like a Galaxy stock, etc., which is like a native tokenization. And I think they're putting you on the shareholder register or something like that, right?
Yeah.
So how do you think the future will? And I think, like, I was checking RWXYZ before this session. We have like 1.8, 1.9 billion tokenized stocks, which is nothing compared to the overall what we have on the exchanges. Where do you think this tokenized stocks on chain, how it will go in the next few years? What's the future for this one?
Again, I can only give you my view. This is one man's view. I would say that everybody wants to own certain, lots of people want to own SpaceX, lots of people want to own NVIDIA, lots of people want to own, the big brands, the big names. And 20 years ago, everyone wanted to own Nokia, which was a big phone company. Now nobody even knows what Nokia is. So I think what's going to continue to happen is that digital asset industry is going to push the TradFi to innovate faster, because candidly, digital assets is doing a lot of things better than traditional finance, like a lot. Okay. And I think it used to be that if you wanted to own IBM stock, you had to trade it in New York only. But now, Aram, as you rightly point out, people are creating these proxy instruments that effectively mirror that same exposure. But here's the difference, though, and this is what I would say. I would say the smart investor will look at the proxy IBM or the proxy NVIDIA, and they'll say, well, geez, I'm having to pay an intermediary a lot of cost to get that exposure when I could actually just get the exposure myself directly. And I think what's going to happen is, and this is where the borders are going to start to become interesting, and the regulations. I think, NVIDIA I think their primary listing is NASDAQ. But why wouldn't NVIDIA be listed everywhere? Like, and this is where you start to get into the nuances of regulatory terminology. Like, I'll give you an example. You guys use the term exchanges when you refer to Coinbase. The actual word exchange is a regulated term. In other words, I can't call my business an exchange if I'm actually not registered as an exchange. So I'll give you a perfect example. The New York Stock Exchange is an exchange, and it has an exchange medallion, which means it has a license to operate and call itself an exchange. And in doing so, it has a license to do a bunch of things that only exchanges can do. But what the layman person or the average person thinks of an exchange as anywhere where I can trade a stock. That's not true. That's a marketplace. The exchange can list a security. A marketplace cannot list a security. Okay, so as an example, NASDAQ, NYSE are exchanges. IEX, which is another market in the US, does not list securities, not to my knowledge, unless maybe they do some ETFs, but they're not really an exchange. They're a marketplace. As are a number, there's probably 60 marketplaces in the US that trade stocks, but there's only really 2 or 3 exchanges.
Yeah.
Make sense? And in Canada, the same thing exists. There's only a few exchanges in Canada. There's a bunch of markets that trade the same stocks. Those are marketplaces. So I use that analogy. So when you look at a Coinbase and a Kraken, it's a bit of a nuanced, like they do list securities, but the way they list them is a very different listings process and a different liability. Because when you're an exchange and you list a security, you actually have you have an obligation to the public to not list garbage.
Yeah.
Because you have this thing called what's in the best interest of the public. And it's actually a regulated obligation. I don't believe, to my knowledge, that Coinbase, Kraken, like they don't have that actual legal obligation yet. I do think that's coming, and that will change or transform how those businesses will post certain securities to list.
Epic. I think everyone goes home today understanding a lot more about exchanges and where they fit in the new exciting financial world. Nick, thank you so much. It was a pleasure to have you on after so many weeks of anticipation. Aram, thank you so much as always for steering the ship. And thank you to everyone who tuned in, who watched. Today is a great day to make your first move, making your first move. Welcome. We'll be back with more guests on the Beyond the Blockchain show. In the meantime, take care of yourselves, your health, and your portfolios. Peace.
Thank you, gentlemen. Have a great day.
Thank you.
Bye.